Hey traders, this is Ram 8. Happy Sunday. Hope you guys are having a fantastic weekend. As always, everything in this presentation is for educational purposes only. All right, let's kick off here looking at the broad market. We're going to use Thinkorswim as usual. This is a daily chart of the Spiders ETF, the SPY. There was the previous high. Here we are up there. It is bulls running wild. We were up every single day this past week. If I zoom in closer, I have three moving averages on my screen for this weekend. That little teal one is the 8-day EMA. The 20 is the red line, 20-day EMA, and then the orange is the big one, the institutional line, the 50-day, 50-day SMA. If I was looking to trade short term, what I could consider here is anything closing below the 8-day. That's a very, very short term stop out as an example. Then we get to the red, that's 20 days worth of data, trading days, not calendar days. And we can see, since we started breaking out here in basically beginning of July, we've touched it a few times and we keep bouncing. So if the spiders would close below the 8, that's like a little mini flag, nothing major, just a short-term, super short-term trend is changing. The 20 is the bigger deal. We get below there, now we have all these buy points. Everyone who bought on the dip was right. If we close below it, they're going to be wrong. That's a sign of sentiment change. And then that's the big one. We close below there and the bears would actually get the edge. So dailies and weeklies are bullish. The Dow, same situation. Now the Dow's not at all-time highs yet, but the target up there around 295, that is where it sits right now. That is 900 ballpark, 900 Dow points, or $9 on the diamond. So everything here is wildly bullish. Let's take a look at gold. When I say wildly bullish, the major indexes. So take a look at gold. Here's a high, there's a lower high, and we sort of have a lower high here. The lows, they're sort of holding. This could still be viewed as a bull flag. It's nothing bad yet. You know, some days we're below the red line, some days we're above it, and that's the 20-day EMA. What I would really keep an eye on here as we begin to, well, so far we're just oscillating sideways, drifting a little lower. It's had an amazing run. This is just taking a break if you're a bull. If you're a bear, you might be thinking, these lower highs, maybe we're finally starting to get some selling coming in here and, quote, everything right now is at least priced in. Watch the 50-day. We close below that. From a purely technical perspective, the bulls lose the edge in the daily chart. Now, if you go back to June, that's exactly what happened, and it was a fake out. But we went right back into consolidation, multi-months of consolidation, and we were in consolidation before that happened. Now we've had a big run-up, so a close below the 50-day typically would be a bigger deal, but right now, gold is still bullish on the daily chart. If I show you a weekly chart, a 3-year weekly, gold is very bullish on the weekly chart. It's above all moving averages. All right, let's go back. Well, we can stay on the weekly here. Let's take a look at silver SLV. Very bullish weekly. This is just consolidation, bull flag action. If we go to a 1-year daily and we zoom in, bull flag, and we're still staying above the red line. We're not even getting below it. So right now, silver is looking even better than gold on a daily chart. We don't say that very often, do we? Now, I had some questions on Apple and Tesla with the stock split. So you can see 4 for 1 here inside Thinkorswim on Apple. Now everybody has 4 times as many shares. That can often lead to selling pressure just because folks say, well, now I have 4 times as many. They just take some shares off the table. It really makes no sense other than it's what people will do sometimes. The stock here is still very, very bullish. Just keep in mind, as we get into September, it's one of the few times all year long that Apple actually trends lower, not by a lot, but it actually dips as we head into that developer conference. What I would watch for on Apple, using this little teal line, the 8-day EMA, a close below that would be the first sign of short-term trouble. So just as an educational example, if I was using 1 or 2 month long calls, or geez, a weekly would be crazy short-term, but let's say a monthly, a multi-month. Below the 8, it would be a short-term stop out. If I'm using a bit longer-term calls, maybe 3-4 months, stop out would be below the red. And then everything's a dead duck once we get below the orange, if that happens. And at some point it will, but it might be, 4,000 years from today. How about Tesla? The Tesla went through a 5 for 1 split. Price is now down at 400. Here was the bull flag. It was even a fake out to the downside. Then comes the explosion. Again, the 8-day, it can't even get below it. First sign of trouble is a close below the 8-day for super short-term trades, in my opinion. Always from an educational perspective. And then the 20-day EMA would be the next one, just like Apple, and then the orange is the bigger deal. But Tesla, Apple still bullish, even post-stock split. And keep in mind, with the fractional shares, it just adds that extra ammo for these things to keep piling higher as stocks are cheaper. Now they're 5-for-1 split on Tesla, 4-for-1 split on Apple. They're even way cheaper than they were just last week or a couple days ago. All right, you know what to watch for now. Keep an eye on those moving averages. I had a question here on Procter & Gamble. Beginning of July, it just started going nuts right through earnings. If I zoom in really closely, look how this 8-day EMA in blue, teal, continues to act as support whenever we get near it. If I was trading short-term, weeklies, monthlies, whatever it is, in the short-term basis, below the blue, teal, we're out. I would be out. Below the red, that might be 2-3 month worth time value of options. Below the red, then the target is the orange, which is the 50, but that's a huge break right now. P&G's really gotten on a tear here. That's a big move. But that's what P&G does, though. I've said this in my other videos from time to time. It actually, when it breaks, it can make some serious moves, considering it's normally a pretty quiet stock. So this one is bullish. How about Coke? Now remember, we talked about this one a while ago. I kept saying, watch these highs. Well, guess what? We are right there. That closing high from June 8th was 49.85. We're at 49.83. We are 2 pennies off. We get, let's say, a positive day, Monday or Tuesday. That's going to break it. And then all of a sudden you go back up to where upper 50s would be the target. That's not bad. That could be a 15% move. And because this drop was so pervasive, it was just straight down, we can easily make that ground right back up and fill those gaps in a hurry if it wants to. Another question on gaming stocks. Electronic Arts, EA. Pre-crash, we were in the 110s or so. Then we get down to 85. Not that big of a sell-off. And then once it took out the previous highs, it stayed there for almost a month and a half or so. Pretty solid. And now we've broken out. So here's what I would do if I would be watching EA. We break the red line, which is the 20-day. It's not real perfect. We don't stay below it often, but sometimes it's a day or two, right? And then we had this big down day on August 11th. The one thing it hasn't done, though, broke the orange. Sort of got near it, tagged it early June. So if we break it, that would show me there's a sign that maybe sentiment is changing. And I want to watch volume too. If volume begins to increase, and the stock starts finishing at the lows of the day, and we break the 50-day, this could be the top then. And there is a bit of a head and shoulders pattern there as well. Another question on U.S. Steel. I would keep an eye on this one as a potential, of course, paper trade. Look at the area right here around 815, within a couple pennies. There's a gap fill up to the 9s and then back up to the previous highs. So maybe I would put an alert here at 820, 815. Anything above there might be a breakout on U.S. Steel. Who else do we got? I got a bunch of stocks here. How about INTU? So we talked about seasonal stocks, and you guys know I do the webinars at financial.com, and the seasonality works amazingly, amazingly well. How could we know that INTU would be going sideways and then just explode? Because that's what it typically does this time of year. So does the others we're going to look at. But here's the point. I had the question on, if I'm following seasonality and we get a breakout, what could be considered as potential end-of-day stocks? I think the 8-day is too close because seasonality, cyclical moves comes from big money, and big money usually is not in it for a day or two because they're simply so large that if they were to buy all their shares in a day or two, the stock would go bonkers higher or lower depending if they're buying or selling. So it's one of those like waves, slow waves in the ocean, up and down. They got to come in over days, they stay in for a while, then they leave over days. So I don't think the 8-day would be a good one in blue. I would actually consider the red line as a trailing stop, something to consider. But now we're way up here. Yeah, and it's all the way down here. That's because the stock's gotten so bullish. But eventually this will start creeping up as the stock either consolidates or starts to pull back. But 310 to 360, and it went right through an earnings report. INTU it has an earnings bias this time of year. MasterCard, this thing exploded too. I remember doing a webinar on August. I got the A right. Around August 5th, right there. And the stock shoots up. It took out previous highs, but it was in the seasonal window. This thing goes from what? A close of 328, 367. It's almost $40, pretty much in a straight line. There was consolidation and then an explosion. Here too, red line could be potential trailing stop. Some of these are getting close to triple-digit wins now, using options out 2, 3, 4 months. Maybe the 8-day could be a short-term stop on part of that if I was going to practice in a paper trading account. but anything below the red I would consider an exit. Then we talked about NVDA. This one had earnings. We talked about, hey, trust but verify. Wait till after earnings or getting in before. Look what happens. Before earnings, we're what ballpark, I'll just round it off to 460. Post earnings, 5.25. 65 bucks, pretty much straight up. The down moves weren't much at all. This thing is very, very bullish. Post earnings, what was it here? Post earnings were up, let's round that to 490. 35 bucks post earnings. It's incredible. And that's after this big run. That's why the seasonality doesn't lie. It's basically just big money pushing stocks, and you want to know when they're doing it. How about Salesforce.com? This thing was just lollygagging around, and then right before earnings, all of a sudden there's a volume pop. Post earnings, there's a volume pop. Now, at financial, it was seasonally bullish, but it was also rated as sell by the algorithm. But the algorithm went on a buy the night before. Just like that, it changed. Isn't that funny? So even something like CRM, when the algorithm is used with seasonality as well, this thing shoots higher. Guess what? Earnings bias. This thing is over a 200% return in 1 day post earnings. How could you almost know it was going to happen? Well, no, there's no guarantee. Past performance can't guarantee future performance. But when these stocks have 75, 85, 95% track records over very specific windows of time, you're just not guessing anymore. The only way that happens is if the big money is contributing seemingly each time each year. So it's a lot of fun. Now, here's two others just to keep an eye on. I specifically am going to bring these two in because this is the time of year where some of the airlines start to do well. United, Delta. Delta's looking the most interesting. Now you could say, holy moly. Well, seasonality worked this year because, the airlines, people just aren't flying. I guess we're going to find out. Once in a lifetime reaction to a pandemic, and the stock's pushing up. If we look closer here, it's just taken out the previous high on a closing basis. Volume for the last 5 days, also above average. And even on the down days, look how light volume is. This just has the smell, if you will, of is the big money coming in again in the window they typically do. And Delta usually has a positive seasonality into that November timeframe. We'll see if it works or not. I'd say it's one of the most questionable ones in the sense that the pandemic, people just aren't flying, capacity's been cut. So we'll see. And then keep an eye on AMD. I wanted to bring something in here that also is bearish. Now we know Apple has trouble in early September, so beware. History is on our side with that. So just keep that one on a short leash. AMD also has trouble in the month of September going into October. So be very careful here if AMD starts to crack. So when I say keep an eye on Apple and keep an eye on AMD, it's always in a paper trading account. I say that over and over and over again. Watch the red line. We close below the red line and volume starts to pick up. That could show us that, the institutions are looking to start to sell this stock again. This was the rip, and now we're just watch. It's funny how we have a double top forming. This still is a bull flag, but Apple, AMD, you can't say you'd be surprised now if they actually pull back into September a little bit. Maybe they won't. Apple may not because of the split and the fractional share issue. They're just on fire. Everybody wants to own them. Can the same be said for AMD? So we'll watch those two as the time goes by. And that is pretty much it. So the market just keeps melting up. I'm not going to do videos this week unless there's some kind of massive move. If there is, I'll let you know via a video. So with that, have yourself a great week ahead. Happy September is just right around the corner. And I'll see you in the next video. Take good care.